Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the latest news updates for Tesla. We're going to be discussing where their future share price is headed, what analysts think of this overall company, why Tesla is about to annihilate their competition, and at the end of the video, we will also be going over some Lucid stock news regarding to a potential hostile takeover and or acquisition that the company could experience. So for more stock news updates on Tesla or Lucid Motors, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. If you're not familiar with Tesla, of course they are an electric vehicle manufacturer, but they're also a lot more than that. They also specialize in energy generation as well as energy storage. Tesla's TSLA share price right now is currently surging out of control in a good way. And this became very apparent to analysts who have radically changed their overall price targets and price predictions regarding the future forecasts for this company's stock price. The CEO Elon Musk is incredibly bullish on his overall company, and analysts have revised their price targets for this EV giant. Just last week, Tesla stock and its TSLA shares spiked by around 33%, which sent it way above its 50-day moving average for the first time since September. Another reason this was very bullish is because on January 6th, the company hit a low of just $101.84, which I was absolutely super excited about because I thought the company was going to drop below $100 per share, and if it broke below that floor, I was going to buy hand over fist, so I'm so mad that it did not drop below my average cost basis for this overall company. But the great news is that if you look at the share price right now, which is currently $170, the shares have surged by around 75%. This has caused various analysts, including a newer analyst, to upgrade the Tesla TSLA share price to a buy rating from a hold rating, to where now this particular analyst has a $200 price prediction for this company over the next 12 months. This actually represents a cut of around $55 because originally this analyst had a $255 price target for this company, which is what I would more gravitate toward. But despite this, I think it's good that this analyst has changed his overall rating for the company from a hold rating to a buy rating. The reason why he changed them from a hold rating to a buy rating yet lowered their price forecast for the next 12 months is in regards to Tesla's decision to cut their overall vehicle prices, which is going to impact their overall investment growth. However, I disagree with the overall analyst on that particular point, and I'll tell you why. The first reason is because it seems that Tesla will outperform on their overall projections. If we look at a Wedbush analyst, Dan Ives, who's one of my favorite electric vehicle analysts, he also gives this company a $200 price target, which is an increase from his original $175 price target, and he gives this company an outperform rating despite their overall cuts for their EV MSRP prices, and we'll get into that. Also, a Cowen analyst also raised his price prediction from $122 to $140. Lastly, we have a Wells Fargo analyst being very wishy-washy, which reaffirms a price target of $150, which is an increase from $130. The reason I say that this Wells Fargo analyst is wishy-washy is because a plethora of analysts, including a Wells Fargo analyst, actually cut Tesla's price predictions right before their earnings report, to where originally he had a $230 price target and then he cut it down to $130. But right now, clearly analysts are eating their words because he had to upgrade them again. Despite his $130 price target, he had to upgrade his price target to $150. So now let's talk about some Tesla stock news before we get into their overall price cuts for their vehicles, which I think is very good news. In today's news, we have the SEC, also known as the Securities and Exchange Commission, is now probing Elon Musk's role in crafting Tesla's self-driving technology and the CEO's claims about their self-driving technology. During Tesla's last earnings call, the CEO, who is Elon Musk, actually said and deployed his full self-driving beta for city streets. And this means that roughly 400,000 customers in North America will get this beta. Tesla is very confident in their full self-driving technology and capability to where their program has over 100 million miles, which means this technology was clearly ready to go. And this doesn't even include the highway driving tests that they administered. So I don't think that the SEC will find anything incriminating in regards to Tesla's FSD, also known as their full self-driving. Elon Musk even commented by saying, and I quote, "We would not have released the full self-driving beta if the safety statistics were not excellent," end quote. So overall, I don't think the SEC is going to find anything incriminating, and I think the full self-driving beta is going to really push investors' confidence to where it's going to encourage investors to invest into this company even more. But now let's talk about their price cuts. How invasive were these price cuts actually? Because I've talked about this before, but now let's get some hard MSRPs, and you may even want to buy a Tesla after this, considering that they're so dang cheap right now. For instance, Tesla slashed their price target of their Model 3 and Model Y in China by around 13%. For their Model 3 in China, they cut their price target by 13% to where now its MSRP is around $33,570. But what does this mean for United States customers? Well, I'm glad you asked. Tesla lowered their Model 3 prices between 6 to 14% depending on what trim you get for this particular vehicle. The Model 3 rear-wheel drive was cut by around $3,000 to where now it sells for around $43,990. However, we also have to include the $7,500 tax incentive, or the IRA electric vehicle tax credit, which will also be applied to this vehicle, which would mean that its MSRP and its customers would pay only $36,240. That's crazy to buy a Tesla that cheap. But it gets even better. What about the performance Model 3 trim? That was cut by $9,000 down to $53,990. But trust me, it gets even better, because the Tesla Model Y for their base trim was slashed by $13,000. That's around a 20% decrease in their price to where now these vehicles are selling like hotcakes for only $52,990. I also want to make investors aware that the performance variant of the vehicle has also been cut by around $13,000 to where now its MSRP is just $56,990. Tesla's selling their Model 3 for just $36,000 and their performance variant of the Model Y for $56,000. This makes it very achievable for average middle-class Americans to buy these higher-end electric vehicles. I personally like the tax cuts, not only because people are getting better deals and we're going to see more Teslas on the road and it's going to increase brand awareness and hopefully lead to an increase in their share price, but this is giving the middle finger to their overall competition. Because to stay competitive, other automakers and electric vehicle companies, even if they have an electric vehicle segment, have to lower their prices of their vehicles to stay in competition. For instance, according to a Bloomberg report, Ford is responding to Tesla's price cuts with price cuts of their own, and they are literally forced to do this because Tesla is the market leader. So Ford cut their Mustang Mach-E electric vehicle by $4,500 to where the Mach-E base model has an MSRP of $45,995. On top of that, they cut their GT extended range version down by $5,900 to where it's worth now $63,995. So this is forcing Tesla's competition to also lower their prices. This means it's going to negatively impact Tesla's competition in terms of their overall revenue and their margins. But for Tesla, it's going to increase their overall demand, allow them to achieve better revenues, and hopefully cause more people to buy more Tesla vehicles. I'm also looking forward to Tesla's release of their new vehicle, which we will get more information on in the month of March. But from Tesla decreasing the prices of all their vehicles, this has caused the overall EV electric vehicle space to plummet. We have Canoo, Faraday Future, Fisker, Rivian, General Motors, Stellantis, and Lucid Group all falling in their share price by very substantial margins. And this is because Tesla just has so much power over all these other vehicle companies and just the overall space in general. But I think that's actually good, which will lead us into our next segment, which is Lucid Group, which is another electric vehicle company which fell by around 6.5% in their overall share price. The reason for this is not only because Tesla is causing all of their competition's share price to fall, which is arguably good news, but another reason why the Lucid share price is falling is recent buzz around a potential buyout from the Saudi Arabian wealth fund. And right now, investors have a mixed view of what is happening to Lucid Group. So let's get some more information. This Barron's article says that Lucid has fallen in their share price by around 7.4%, which happened right after an initial surge in their overall share price due to rumors of an unconfirmed buyout of this company. A stock research blog named Betaville said that the Saudi Arabian Public Investment Fund is going to acquire Lucid and completely buy them out. And for context, the Saudi Arabia Public Investment Fund already has a huge investment into Lucid, and if they wanted to acquire Lucid, they easily could. So investors are split on this whether or not this is good or bad. Overall, I would say this is pretty bad, because if you want to make money on this stock and you believe that the future share price will continue to appreciate, this is going to be somewhat bad for you, or not the best news that you could have received. But as of right now, this is still speculation and nothing has officially come out about this. Now, what is interesting is that Lucid actually declined to talk about these potential rumors, which is interesting because you would think if this was a rumor, Lucid Motors would instantly come out and say, hey, this is just a rumor, this is not actually happening, we are not actually in talks with the Saudi Arabia Public Investment Fund. So we're going to see how this story develops over time, but overall, Tesla is in an amazing position for their future share price to build value for their shareholders over time. So with that news update, go ahead and smash that like button for more news updates on Tesla, subscribe if you are new, comment down below where you think the share price is headed for Tesla and what your price target is, and with that being said, I will see you in the next YT video.